You're good.
Good morning. Good morning, everyone. Hello, and we want to welcome you to the first of 3 listening sessions hosted by CalHFA to discuss the Homeowners Assistance Fund California Mortgage Relief Program. My name is Nicole Evans, and I'm facilitating today's session. Before we get started, I wanted to give you some important reminders ahead of time. First, we want to let you know that today's session is being recorded and it will be saved and posted on the CalHFA website a few days after the session, along with a transcript. If you need technical assistance during this session, at any point, you can go to the link listed here at the bottom of the presentation slide, and you'll get some assistance. Handouts and other documents are available, and they can be found on the Handouts tab with the red arrow on your display screen. And they'll be eventually posted on the CalHFA website a few days after these sessions complete. If you'd like more information about the program and additional ways to submit public comment, you can find that on the CalHFA website, again, using the link listed in today's slide. There's a survey, and you can also just submit written comment if you'd like. Also, everyone will be muted during the presentation portion of this meeting. When we get to the public comment session, we will open up your microphones as you raise your hand and participate in the session. All right, moving along then. We are here today to receive your comments. We want to hear from you on the administration of California's portion of the Homeowners Assistance Fund, which was created through the Federal America Rescue Plan Act. We have representatives of CalHFA, the agency that's administering California's program, here to explain a little bit about how the Homeowners Assistance Fund, a little bit about the fund, and then we really want to get your feedback. So after we go through a presentation, again, we'll open up public comment and hear from you directly. Please note, though, that this program is still in development. We're still awaiting guidance from Treasury. So this is really designed to be a forum to hear from the public and other stakeholders to provide your feedback as the program is under development. We want to hear your recommendations, your preferences, and your thoughts about current homeowner needs assistance. Just a reminder that HAF funds are not currently available for distribution. So if there are homeowners at this meeting who need to request assistance or have a question on how to get mortgage assistance right away, please contact your mortgage servicer or call a HUD certified housing counselor. There's a number at the bottom of this slide, and you can see if you can get immediate help with resources that are currently available. So with that, let's get started. I'd like to first introduce the members of CalHFA's leadership team who are here with you today. We have Tim Sue, who's the Director of Single Family Programs and HAF Program Manager. We have Francesca Marty, who's the Director of Legislation and Policy. Ted Ballmer, a CalHFA attorney, and Cathy Phillips, the Director of Marketing and Communications. They're all here with you today. You can't see them, but trust me, they're here. So at this point, I want to kick it over to Tim, and he's going to give you a slide overview. Tim?
Good morning, everyone. Now you can see me. So first, I'm going to provide a little bit of a program overview. Much of this is part of the Treasury guidance that we received from Treasury now some 3 or 4 weeks ago. As Nicole mentioned, the funding for this program comes from ARPA, and the entire allocation for the program is a little bit shy of $10 billion. And Treasury has allocated this $10 billion to all the states based on a formula using unemployment and distressed mortgages. And using that allocation method, California is slated to receive just a little bit more than $1 billion. The main purpose of the program is to prevent homeowners with their delinquencies, forbearance amounts, defaults, and displacement. This is a very important point, and also foreclosures among many of the hardships that they suffered since the COVID pandemic started early part of last year. And at this time, the guidance from Treasury is that the plan from each state must be submitted to Treasury by the end of this month, June 30th, 2021, for their review and input. So submitting the plan doesn't mean that a plan is approved by Treasury. We did learn from last go around that it could go through many rounds of feedback from Treasury before the plan is finalized. Next slide, please. So here are some of the high-level key requirements that came out of their guidance, and also a sample of the permitted uses of these funds. So first, the requirements. It does require that the homeowner had a hardship after January 21st, 2020. And that this is also a very important point, that the original mortgage of the homeowner, the original mortgage amount did not exceed the loan limit at the time the loan was originated, and the loan limit that was set by the GSEs at the time that the loan was originated. And that in terms of targeting the population, 60% of the funds, at least 60% of the funds must be used for 100% or below AMI. And there is a general prioritization of socially disadvantaged individuals and population. And as I mentioned, some of the permitted uses for the funds are mortgage assistance, and also homeowners insurance, HOA fees, property tax, utility fees such as electric, gas, and water, and internet. Next slide, please. These are some of the high-level implementation goals that set out by both Treasury and also by us at CalHFA. There is, as I mentioned, a general prioritization of low-income and socially disadvantaged individuals and underserved communities. This is definitely a focus in the guidance and something that we will prioritize. And to the best of our ability, we're going to set up a system that's easy and streamlined to use. And we also want to prevent any duplications and overlaps with the other state and federal assistance programs out there due to COVID. And we are taking a very holistic approach to this program. We understand that the circumstances this time are different from what it was during the last financial crisis. We definitely want to eliminate mortgage delinquencies, and one of the big things that we're talking about is forbearance amounts. And we do want to allow homeowners to remain in their homes with a sustainable and affordable payment. And we do understand there are also vulnerable homeowners that do need a little bit more help in terms of financial literacy and the choices they have, and we will connect these vulnerable homeowners to counseling options. And we will also try to facilitate a longer-term sustainable recovery solution for unemployed, underemployed, which is an important point as we go through the recovery process, and severely housing burdened homeowners. Next slide, please. And I'm going to hand it back to Nicole.
Thank you, Tim. Thanks for that overview. Now's the time we want to hear from you. So to provide public comment, we want to ask you to use the raise hand feature, and the meeting facilitator will inform the presenters when it's your turn to speak. Again, we really want to hear from you on how we can best implement this program or get your feedback and your thoughts. But we are still developing the plan, so we might not have answers to a lot of the questions today, which is why we want to hear your recommendations and preferences. So if you want to make a comment, you just click that raise hand button near the top of your screen, and then we'll call on you. Just listen for your name, and when you hear your name call, you unmute yourself and share your thoughts with us. Due to the large number of participants, and we do have a lot of people here today, we appreciate your time and thought and interest. But due to the high number of participants, we're asking everyone to please keep your comments to 3 minutes or less, so we can give as many people as possible the chance to speak. If we have extra time at the end, we'll see if we can have longer comments, but right now we want to try to give everyone as many people as possible the chance to speak. We have until 11:30 here today. It's 10:15. We've got a good chunk of time to hear from you. So if you don't want to speak, but you still want to provide comment, though, you can do so by submitting written comment to CalHFA. There's also a survey related to this program that you can take on their website. You just visit the web address here at the bottom of the slide that you have in front of you. So just in case, I'm sure that you have plenty of thoughts and feedback you want to provide, but if we need to get this conversation started, we have some specific questions that we're going to ask of you. And I also wanted just to remind everyone again, if you're looking for financial support today related to your mortgage, to please reach out to a financial counselor to see what resources are available today. This program is not in effect quite yet. So we have some feedback prompts here for you. These topics specifically we'd like to hear from, but also interested in other thoughts and feedback folks have. So at this time, then we'll just go ahead and get started, and I'll ask our operator to provide us with the first person in line, and they can provide their feedback.
Okay, Sherry Powers, your mic is unmuted. Please go ahead with your comment.
Hi there. Sherry Powers, did you have something you'd like to comment?
Okay, there we go. Yes. I was around the last foreclosure crisis, directing a homeownership center in Oakland, California, and I'm doing the same thing now in San Francisco. And one of the things we saw the last go around is that people who were in an active bankruptcy or who had filed bankruptcy were not allowed to participate in Keep Your Home California. And I would really encourage you to not do a blanket prohibition because some homeowners, in order to keep their home, have actually filed bankruptcy, and so there would be a way to identify, you know, that bankruptcy was really caused by COVID. And so if they've done that so they could stay in their home, I think that you should have some consideration for that, and not just do a blanket exclusion. That was really, really harsh the last time, last go around. And we were able to negotiate a lot of loan modifications while people were in bankruptcy, working with bankruptcy attorneys and with the trustees. And so I really, really would like to make that appeal. And then the other appeal would be, we've heard from a lot of homeowners who've gone through their retirement funds to stay current on their mortgage and now have no savings. And so that would be another consideration, is what can we do to assist people who drew down on their retirement funds to stay in their home. So some consideration for that as well too. Especially because a lot of those folks are small business owners or self-employed. Really very, very, very harsh right now.
Okay. All right, Sherry, thank you. That is a very helpful feedback and comment. I appreciate it. Do we have another speaker ready in line?
Yes.
Provide comment.
Steve Irwin, your mic is unmuted. Please go ahead with your comment.
Hi, Steve.
Hi, good afternoon. My name's Steve Irwin. I'm president of National Reverse Mortgage Lenders Association. And I want to, first of all, thank you for convening this listening session. It's critically important. And I would note, we have submitted written comments through the necessary email addresses, but I want to amplify our concerns, which are namely that in contrast to its policies for regular FHA insured mortgages or forward mortgages, HUD has not created post-forbearance options for reverse mortgage borrowers that would allow them to defer payment of property charges until the end of their loan. Rather, HUD's current loss mitigation policies would require reverse mortgage borrowers to pay back the unpaid property charges through a repayment plan of up to 60 months. Because of this lack of good post-forbearance options and their vulnerability, reverse mortgage borrowers especially need homeowner assistance funds assistance. For that reason, we strongly encourage the California Housing Finance Agency to include in its HAF plan the accessibility to reverse mortgage borrowers and to effectively serve this important and critically important purpose. Thank you for hearing me out, and I'd be happy to answer any questions or concerns. Thank you.
Thank you, Steve. Thanks so much. And thanks for the written comments too. Okay. Sorry, I'm getting a little feedback. I don't know if there's an open line. Okay, thank you. Okay, do we have another person in line here to provide comment?
Yes, we do. Nikita Isaac, your mic is unmuted. Please go ahead with your comment.
Hi, Nikita. Thank you for joining us. Nikita, are you with us?
Good morning. This is Nikita. Yes, thank you so much for having this forum. I really appreciate an opportunity to be able to speak to my situation and also just shed some light on what I'm going through with this COVID, when it hit. I work for the state of California, and I've worked for the state for about 20 years now. I have 3 children, and they're all in college now. I am a homeowner, and I have been for about 10 years. But with COVID hitting, I experienced furloughs through my job, which meant that I'm barely making ends meet because my expenses are about $300 more than what I'm making. And as a result of that, I haven't been able to keep up with my mortgage payments. The only thing that has saved me is through Sinlar, my mortgage company. I'm able to get a deferment or forbearance on my loan. And so for the last year and a half, that's what's been keeping me in my house. Unfortunately, I don't know what I'll do once the limit is up for the forbearance. Right now, I'm looking for other work. I'm looking to change careers as a court reporter, but even that will take time to do. I'm looking at other job options, but even that might take some time to get into. So I'm really at a point where I'm trying to save as much as I can while the forbearance is going, but even with, paying garbage and paying electrical and paying for my Comcast or for Wi-Fi, all of those things are creating more of a burden than I can really keep up with. So once my forbearance is up, I'm really at a point where I don't know where I'll get extra money from to keep my mortgage payments up. And so I will need assistance real soon. And so I'm hoping that the government will see the need for, homeowners to stay in their homes and do something to help. One of the things that I think would be helpful is giving some cash assistance that will allow, you to forecast your expenses or to help forecast expenses. And so that's what I'm hoping will happen. I don't know how long all of this will take, but I'm hoping it'll happen sooner than later. So yeah, that's pretty much the situation I am in and what I am looking forward to. So I know there's a lot of people who are losing their homes now and are in similar situations. So hopefully the government can help in some way so that we don't lose our homes.
Yeah. Well, Nikita, thank you for sharing your story. And it's, the program was created for real homeowners like yourself. And I want to let you know that I know CalHFA is working as quickly as possible to get this program up and running, although we have to work with the timeline that the U.S. Treasury has set. So the first phase of the plan is going to be submitted by the end of the month, but it does have to go under review from Treasury. And but the goal is to get it up and running as soon as possible. But if you need help now, in addition to the support you're getting, please work with a mortgage servicer or call a HUD certified housing counselor to see if there's any other assistance you can get in the meantime.
Okay, I certainly will talk to a counselor. Thank you so much again for having this.
Yeah, thank you. Okay, do we have another person who has comment on the line?
We do. Christina Vecchio, your mic is unmuted. Please go ahead with your comment.
Good morning. My name is Christina Vecchio. I'm a partner with the law firm of Joseph & Cohen, and I represent various financial institutions, banks, credit unions, mortgage servicers. Steve already beat me to the punch here, but I did want to echo Steve's concerns with respect to ensuring that reverse mortgages are included within the scope of the relief that is provided. Reverse mortgage borrowers, as you know, are elderly homeowners and among the most vulnerable in the population, given the COVID risk, which even though we are reopened as a state, COVID is not fully gone. It's here to stay in the long term. So we do want to just make sure that reverse mortgages are included within the scope of relief, particularly the taxes and insurance issue that Steve had raised. So I don't want to take up too much of your time, but I did want to echo his concerns and be sure that reverse mortgages are included. Thank you.
Perfect. Thank you so much. Okay, let's get hear a comment from another person. Thank you.
Okay, Gina DeGiro, your mic is unmuted. You can go ahead with your comment now.
Hi, Gina.
Good morning. Good morning. Thank you for the opportunity to speak. I'm a senior attorney at Housing and Economic Rights Advocates. We're a legal nonprofit based out of Oakland, and we work with hundreds of homeowners on loss mitigation and home preservation issues. We also help administer local grant programs. And so the things that we're seeing, and I was here during the last crisis and helping with Keep Your Home California, the major barriers that we have found historically have to do with documentation hurdles. When homeowners are asked to provide copious amounts of documentation to show hardship or sustainability, that creates a tremendous hurdle for participation. We have, I would say the majority of the homeowners we end up having to help are seniors or individuals with disabilities. And even though we're attorney advocates, because of the documentation requirements of various programs, we physically have to go to the homes of these individuals to help them because they either cannot get their documentation together, don't know where to look, don't know how to access their files, are overwhelmed with anxiety because of the burden of documentation. So I'd ask that you limit those requirements, use affidavits as much as possible to document hardship or sustainability, to streamline the funds and make sure that those who can't access documentation, who are usually the most vulnerable, aren't penalized. I would also ask that not solely relying on online applications or only pointing individuals to links or websites. A lot of these individuals that we help have technological limitations. A lot of folks do not have scanners or even working printers, don't know how to get things online. If there's a phone number they can call and get a paper application mailed to them, that would be very helpful to increase access to those who have less resources. I would also ask that you set aside and really take advantage of providing funding for legal service providers and housing counselors to help folks who need the extra assistance, and perhaps creating an escalations team where we can go if there are issues with particular applications that are very tricky. At Keep Your Home California, there were a couple individuals who we were able to contact in very difficult cases, and that proved very helpful for folks. And then I will say, finally, two things. I would ask that these are grants, not liens. With Keep Your Home California, we're still having homeowners call in having issues with subordination of liens from Keep Your Home California or not being able to afford ongoing housing repair because of the liens from Keep Your Home California. And then finally, showing sustainability. If there is going to be a sustainability requirement, again, an affidavit not having to show proof of sustainability to limit the documentation required to access these funds. Thanks so much.
Thank you, Gina. Very, very good insights. Thank you. Who do we have up next?
Okay, Angel Carrencia, your mic is unmuted. Please go ahead with your comment.
Angel. Angel, are you able to unmute? Angel, hi, are you there?
Hi, thank you.
Hi, you're welcome.
Yes, can you hear me? Okay. I really appreciate this. Homeowner for 20 years, never late until COVID, taking care of 2 elderly parents, one with Alzheimer's and a 90-year-old, trying to take care of the 77-year-old. I'm stepping in. I can't stress enough how important it is for the speed up in terms of, I know what is going to happen in September. Millions and millions and millions of foreclosures are going to start, including me. So in September, that's when it ends. So if the program isn't available in August, I mean, foreclosures are going to be starting. My mortgage was sold by Wells Fargo into a loan processing center that is a complete and total nightmare. I've been trying so hard to communicate with them throughout the whole year and a half now. They are pretty ruthless in sending documentation that I never requested. Oh, thank you for asking for loss mitigation, trying to confuse me with all sorts of strange documentation. I venture to guess I'm not the only one that has been confused by mortgage companies while we're in forbearance, sending us all these things about huge balloon payments and other things that, of course, I would not like to enter into because I cannot afford to enter into them right now. I believe right now I'm socially disadvantaged and Hispanic, so I don't know if that qualifies me, but I think this is amazing and I love this. If it doesn't happen for me, I'm grateful it's going to happen for other people. But boy, if they could speed this up for people like me that are really in desperate need for it to hold on to our homes, that would really be amazing, and it would really help millions and millions of people in California not go into foreclosure. Thank you.
Well, thank you, Angel. Thank you again for sharing your story. These individual stories are really helpful to hear. And please, you know, again, keep track of this program as it's developed. Like I said earlier, and Tim has said, we're a little dependent on timelines with the U.S. Treasury and their process. So I know CalHFA is working as quickly as possible to move on this program. But in the meantime, if there's any other support you can get by contacting a mortgage servicer or contacting a HUD certified housing counselor, we encourage you to do so.
Thank you.
Yeah, absolutely. Okay, next up, if we have another speaker, we're ready.
Carol McKenna, your mic is unmuted, and can you please go ahead with your comment?
Hi, Carol. Carol, have you unmuted? Are you there?
Oh, sorry about that. Are you there?
Yeah, we're here. We're ready to hear from you, Carol.
Yeah, I got here late, but I did hear some of the people speaking, and I really appreciate the program and everybody. And I just wanted to kind of reiterate, yeah, my situation. I'm also furloughed, and my partner is as well, has been since March. We got behind about 6 months on our mortgage, and our forbearance, for which I am very grateful for, but it is going to run out in July. Fortunately, I mean, we're not taking care of Donna's mom anymore. She's now moved to Nevada, but that we would have been in a similar situation as Angel, but we're not right now, so she's okay. And so I am just hoping that as everybody, I know you said that they're trying to go as fast as possible, but because I'm not really sure, Nicole, how could HUD help us? Because I'm currently working with, of course, our loss mitigation, and I have a single point of contact with them. And I mean, I know they're like, well, best case scenario, you catch up the 7,500 really quick. And I'm like, yes, I appreciate that, but I can't just pull it out of our hat. And so the HUD, so I'm working with them. We are not able to do a modification, I learned, because we don't have an income. The cool part about a loan modification is that the money, then those 6 months, would go on the back of the loan. That's not an option for us because unemployment is not a permanent income. So, I mean, I've asked them to change those requirements due to COVID, but it sounds like it's not really going to happen. So I was wondering about HUD. I'm not really sure how they could help, but can you explain that?
I will see if one of our other participants here today want to chime in. I know that we have a slide here that shows a phone number you can call as well. But okay. Francesca might have something to add.
Yeah, I mean, my name is Francesca Marti. I'm the Director of Legislation and Policy at CalHFA, and I'll reiterate what Tim said in the kind of presentation and what Nicole has said before. This is a program that is run out of U.S. Treasury. So we are under their process for submission, review, approval, and they issued initial guidance. They're going to be issuing further guidance, and we're awaiting that. We're open to collaboration with other federal, state, local entities. I think, to the extent that they can make the program more effective, reach more people. So we're all open to collaboration, but the program is being run out of U.S. Treasury, so that's where it lives. And any comments that you have for collaboration with other governmental or non-governmental entities, we'd like to hear that feedback. Thank you so much for your comment.
Thank you, Carol. Do we have another comment at this time?
Yes, we do. -M, your mic is unmuted. Please go ahead with your comment.
Sorry there, just if you can talk a little bit slower.
Oh, okay. Are you asking me to talk slower? I can do that. Would you like to provide a comment related to the HAF program?
Hi, this is Haypen. Can you hear me?
Uh-huh.
Okay, great. My name is Haypen and with Faith and Community Empowerment. And I just wanted to just emphasize that in terms of outreach into the various languages, especially for the Asian languages, including Korean, that I remember with Keep Your Home California, there were some tools that were in different languages as well as collateral. And so I would like to put that out there. And I know that, again, ethnic media is so critical and so important. So whether you set aside budget for the nonprofit to partner with the ethnic media or otherwise, I think that, again, is so critical and important because we've encountered so many people who never heard that these kind of programs exist. And so like they're racking up their credit card limits and, using whatever to kind of hang in there. So please, the outreach, especially in the different languages on the website, the tools, the collateral, advertisement, all that, very critical. Second piece is that again, depending on the regulations, maybe there isn't room, but I think what was helpful during the stimulus was that for people to just say, I need help. And I know that for loan modifications, the criteria is that, they have to show sustainability going forward. And for many people, they're in their current situation because they don't have that to share right away. So I don't know, again, in this world, what is possible, but that requirement definitely, you know, prevents a lot of people from getting help. So I want to bring that to your attention.
Oh, I appreciate that. That's helpful. Thank you, Hazen. And I know in particular on our prompts here, we wanted to hear about some communication and outreach methods. So but thank you for weighing in on that. We appreciate
You know what, I think on that note, just FYI, there's also, again, other, particularly like chat rooms are very, well used in ethnic communities, particularly even senior citizens who seem to have problems with emails and other things. But like WeChat seems to be very popular with the Chinese community, like Kakao Talk seems to be very popular with first generation. So perhaps to create space and room that those kind of communication tools, either you guys invest or that you partner and provide the resources for your partner organizations, housing counseling agencies to, you know, use those tools as well.
Great, thank you. Thanks, that's helpful. Okay, do we have another person in line to provide comment?
Yes, Catherine McGill, your mic is unmuted. Please go ahead with your comment.
Hi, Catherine. Catherine, are you unmuted and able to provide comment?
Sorry, everyone. Good afternoon. I apologize about that. Thank you for giving me this opportunity to speak. If you're not aware, we are a local HUD-approved housing counseling agency in Southern California. And I wanted to share a resource because we do have so many homeowners that are on the line. Collectively, under the Center for Economic Recovery, Lori Gay has touted that mission. We have pulled together pretty much several housing counseling agencies within Southern California. And we also probably going to move that into Northern California, where we can provide assistance to consumers. So for the participants that are on the call, they're many homeowners, please refer to your HUD certified housing counselors or go to the website saveyourhomela.org, where you can get free assistance. Hai Pen is also a executive director of a HUD housing counseling agency, and we have made sure that the tool is multilingual, not only English, Spanish, and various other languages. So that is a resource that I'd like to get out to consumers immediately that are on this call. We are HUD-approved housing counseling agencies, and we have pulled together under the Economic Center for Recovery, and we've created a website of HUD housing counseling agencies locally. So please get those resources. For the moderator of the call, I am curious to know on the panel that you're pulling together, are you in fact, or have you reached out to some of the HUD housing counseling agencies to have them included in the process of what's being built so that it can be successful with getting it out to the consumers? That is a question I have.
Well, this listening session is a very important part of the process of developing the California's program that they're going to submit to Treasury. If Francesc wants to add anything in addition to that, I will turn it to him.
Yeah, the answer is yes. We are conferring and talking to HUD-approved counseling agencies as part of this feedback process.
Perfect. And go ahead.
No. Yes, that was the answer.
And I just want to confirm that we also have multilingual organizations as well engaging in that partnership.
Well, for this listening session, we are talking to the HUD approved counseling agencies, but our program, when it does go live, you know, we're still designing it, but we will have a multilingual component because obviously we want to reach the maximum amount of populations as possible. So yes.
Wonderful. And then my last question, or my last thought that you could probably take to that planning group, is to ensure that possibly we look at a key database that not only HUD housing counseling agencies, but maybe some of the other advocacy groups have access to, so that we're all seeing who has actually reached out to an organization, and we don't have households that are going from one organization to another because maybe they didn't get a favorable decision when they came to organization A, and then they went to organization B still seeking that information. So that might be something you want to put together as an actual database that we all have access to as we maneuver through this grant, so we can see who is actually getting the assistance and they're not going from one organization to another.
Helpful. Thank you. Thank you very much, Catherine.
Thank you very much for the time.
Yeah, thanks. Okay, do we have another person on the line who'd like to provide comment?
Yes, we do. Mirabelle Johnson, your mic is unmuted. Please go ahead with your comment.
Hi, Mirabelle. Thank you for joining us. Mirabelle, is your mic unmuted?
Sorry about that. Hi. Yeah, so I am also with Faith and Community Empowerment, a HUD-approved housing counseling agency. We are actually involved in that group of housing counseling agencies that Catherine had mentioned. But I just wanted to, from a housing counselor perspective, with some of the clients that I've been getting, I've noticed that there's a lot of families where the children have started to support their parents in this time of crisis where they've lost their jobs, and in order to upkeep those payments, even though they do have some arrearages due to forbearances that they took during this COVID time. In trying to go through the loss mitigation process, trying to prove that border income, if it is a family member living in the home helping them out financially, or if it's an outside family member outside of the home providing an ongoing gift to make that sustainable, that is hard to prove because there's a lot of documentation that people will want in order to prove it. And so maybe making some sort of requirement from the servicer that they can just take a certain type of proof, whether that's like bank statements with highlighted transactions to the person owning the home, or pay stubs of the person supporting, but just something that's not like 5 different kinds of documents, but just one that they can refer to. Also, that for gifts, if it's a non-family member who's providing a gift, an ongoing gift, to make that sustainable during this time while they're not able to be employed, or they're in some sort of crisis situation, for that process to be a little bit easier, to prove that that it is ongoing until they find their own income, and that they would still qualify for that based on that form of income.
Okay, great. Thank you, Mirabelle. Okay, who do we have next on the line?
Okay, Matthew Hogue, your mic is unmuted. Please go ahead with your comment.
Yes, good morning. This is Matthew Hogue. I'm the outreach coordinator at CSA San Diego. We're another HUD-approved counseling agency. And we've also been seeing, specifically with the rental assistance program, but also with maintaining your home, a lot of families supporting each other as well. And I think that would play into the documentation required. We've seen also a lot of families separating and changing their income status, and that can be difficult to demonstrate a COVID-related issue when there is in fact one. So there's a number of kind of questions regarding the documentation that I think need to be analyzed. The other thing I would recommend is also looking at some of the analysis of impediments and previously redlined areas to make sure that we're prioritizing those homes to make sure that communities can stay in the communities that have previously been historically disinvested in. So those are things that I would recommend looking at. That would also help identify particular communities that need outreach to make sure that they are aware of these programs, identify specific languaging that needs to occur, etc. So those are just kind of a few things I was thinking about with regard to this. Thank you.
Great, thank you, Matthew, very much. Who do we have up next?
Okay, Crystal Adams, your mic is unmuted. Please go ahead with your comment.
Hi,
Okay.
Crystal.
Good morning, everyone. Can you hear me?
Yes.
Perfect. As a new homeowner, COVID hit right after I purchased my new home, and my husband lost his job, and so our obviously our income changed drastically. And while we were able to make our mortgage every month because it was a high priority to me, we just received our first taxes bill. And the taxes on the first year, the supplemental, is incredibly high for the most part. So it's a $7,000 bill that now I have no clue how we will pay. And so when I was reading the ways that the money can be used, I want that to also be a consideration because quite a few of us may have tax bills. And while we may have scraped together enough money to pay our mortgage, there are other things that could impact us having our home or losing it and so forth.
Okay, Crystal, that's helpful. Thank you very much for sharing your story. Thank you. Who do we have next on the line?
Steve Monaco, your mic is unmuted. Please go ahead with your comment.
Hi, Steve. Hi, is your mic unmuted? Can you unmute your mic, please?
Can you hear me now?
Yep, I can.
I wanted to initially thank you for hosting the presentation. And I come at this as a homeowner who recently became aware that Keep Your Home California, who originally offered support for a period of 5 years as a lien, and then changed the term of the lien. I understand now that the lien is extended, and if a mortgage is modified, my circumstances were I accidentally learned about this extension by Keep Your Home California, and there was no notice directly provided. This will significantly impact a homeowner's ability to perhaps work with their servicer to create a more affordable, more sustainable solution, like a modification. And I was wondering if somebody might be able to look into this sort of change and see if there might be anything to do in this obviously challenging time.
Yeah. Well, thank you, Steve. I'll say, first of all, this, what we're looking at today is the development of California's HAF plan. So I'm assuming you'd like to provide a comment along these lines as to how this program is developed and ensuring that people are notified if there is a change in their lien related to this program. So I've noted that, but I don't know if there's anyone from CalHFA who would like to add anything in addition.
Got it. Thank you.
Mm-hmm. Okay. I think I covered it. Thank you, Steve. Okay, who do we have up next?
Nicole, at this time, we do not have any further comments from the public.
All right. Well, we'll give it a few minutes. Actually, we're going to stay on the line until 11:30 because we promised to do that to the public, and there might be folks who show up here in the next half hour who weren't here in the beginning. And so give everyone who's on the line now an opportunity again to think about if they would like to raise their hand and provide comment. We really appreciated all that we've received today. It's been really helpful and insightful and vital to the development of the plan. So public participation is much appreciated. So if anyone else on the line currently would like to provide comment, please raise your hand, use the raise hand feature, and we'll be sure to call on you. Otherwise, we are here until 11:30 today, as promised, to provide comment. And I'll just give a second here to Francesc or Tim to see if there, or Ted, if there's anything else that we've missed today that that you'd like to address as we're waiting to see if we have more folks who would like to speak. Francesc, I'm going to give you the first shot here. Thank you.
I don't have anything to add. Thanks, Nicole, for facilitating this listening session, but I would like to thank everybody that participated today. This is a vital part of the process. You know, we're going to be taking all this feedback and incorporating it into the design of the program. So we're very, very grateful for your engagement. As Nicole said, we're going to keep the mic open until the end of the session. We have 2 more listening sessions, and we also have an email address for you to provide feedback. So again, very, very thankful for all your time today, and thank you again for your engagement.
Thank you, Francesc. So yes, thank you for the prompt. Again, written comment, you can go to the CalHFA website here noted at the bottom and provide your own written comment. There's also a survey that CalHFA has created that you can fill out in addition or separately or on its own. So we, you know, looking for, there we go, looking for your input and feedback. We are working on a timeline. You can provide feedback as long as you like, but for incorporation into the plan that we're submitting to Treasury here at the end of the month, we're looking to get all of that feedback by the 20th, and then we'll be sure, or by the 18th, I'm sorry. And then we'll be sure to incorporate that in the first phase of our plan, but it's going to be an iterative process. You know, it goes to Treasury, it goes for their review and input, and then you know, we'll be developing it further. I think it sounds like we might have a few more comments out there in the virtual land, so I'll turn it back over to our moderator to help get us another speaker on the line. Thank you.
Okay, Faisal Azray, your mic is unmuted. Please go ahead with your comment.
Yes, ma'am. Can you hear me?
Yes, I can. Thank you.
Yes, ma'am. How can we listen to all the question and answer again in another, like the whole session in different time? Just there's some question I really missed one.
Yeah. There will be.
What's the website?
Yes,
ma'am.
there will be a recording of today's session and a transcript posted probably early next week. It takes a few days for that to get done. So we'll post it on the CalHFA website here at this website you're seeing on your screen.
One more question. When we can apply for the, you know, when the we have the availability to use to write down all the applications, submit the application.
The program is not available yet. We're still going through the approval process. So it has to submit a plan to the federal government by the end of this month. And then the federal government, there's a little feedback on the line. I don't know if we can mute that.
Yes, ma'am. I will definitely go through it. I just want to make sure I don't want to miss, because usually there's a time frame for that.
Yeah, well, we don't know those time frames quite yet, but please keep watching the CalHFA website that's posted here for more information.
I guess, ma'am. I definitely will. Thank you so much for your input. I do appreciate it.
Yeah, thank you.
Thank you.
Thanks. Do we have any other comments? There's an open line to moderator that is getting a lot of people.
Okay, Sherry Powers, your mic is unmuted if you'd like to make a comment.
Sure. So I posted this in the chat box, and I also put it in my written comments. And so I just want to underscore what I've heard repeatedly on the call here, which is that people who are still unemployed or underemployed should not have to demonstrate sustainability to receive assistance with arrears and or 1 to 3 months of forward payments. I'm not sure if you're including that as part of the program, but you know, the economy has not returned to what it is, and people are still rebuilding. So please, the sustainability would be a death knell to a lot of households. And it's something we've seen, and it's something that I've heard now. So I just wanted to reiterate it and underline it. Again, I'm in the San Francisco area, and we support homeowners in the Bay Area, and it's harsh out there. So I heard the homeowner who who's been getting help from family members, the other one who's been paying but just barely and now has a huge tax bill. So all of those things, please take those into consideration, and let's not have sustainability be an obstacle to people keeping their home.
Great, Sharon, thank you. Do we have another comment out there?
Yes, we do. Kevin Kane, your mic is unmuted. Please go ahead with your comment.
Hi, Kevin. Hi, Kevin, is your mic unmuted?
Can you hear me?
Yes.
All right. So I'm also from Faith and Community Empowerment, and I just wanted to just piggyback on everyone in my organization, where a lot of immigrants, they come from places where they're kind of afraid of big systems and the banks and everything, so they didn't take forbearance in case of other repercussions. So they've been borrowing money from friends, families, all of that. So again, I just wanted to add on to other people who mentioned that. So if you guys are able to figure something out with that. And then number two, again, we are currently working with LA County and their mortgage relief program. And the issue right now is that they haven't fully figured out all of their systems, but they prematurely launched their program, where I had to go back and forth with a client a good 5-6 times, just backtracking because they kept changing policies. And I've been working with certain clients for 2 months on this, and they still haven't received anything. So if you guys are able to actually come up with a full process before pre-launching, that would just be really, really helpful for housing counselors.
Okay.
Thank you so much for being part of this, and really appreciative.
Thank you, Kevin. Thanks so much. We appreciate your feedback. Do we have another commenter on the line?
I have not seen any hands up at this moment, but I'll continue to monitor and let you know.
Thank you very much. Again, if there is anyone on the line who needs help immediately, the HAF funds are not yet available, but if you are a homeowner who needs assistance, please contact your loan servicer or call a housing counselor at the number on the slide here, 1-800-569-4287. And we'll just hang out here for a little longer. We've got another half an hour left on the clock. So we will stay here and take all the comments that come in. We want to hear from as many people as possible. We'll also have another 2 listening sessions. There's one later this afternoon and one on June 17th. You can register and find that information on the CalHFA website as well. It's the website listed at the bottom of the slide. And we're just gonna, I think we need a little music or something, right? A little background music to get, yeah.
We have a comment.
Oh, great.
Okay, Sahara Garcia, your mic is unmuted. Please go ahead with your comment.
Hi, good morning, Sarah Garcia, NeighborWorks Orange County. A question I know that, our counselors unfortunately have a challenge in is the communication with servicers. And out of curiosity, with the public comments, I think it's fantastic that we have the opportunity of borrowers giving us their valuable feedback. I'm just wondering if there's any feedback that is going to be, or a conversation to be had, or has been had with servicers as far as communication is concerned, to be able to work out any modifications or work out a plan with borrowers, if any.
So are you recommending that for this program there is communication with servicers regarding modifications, that there's
Correct.
Integration in that? Okay.
Yes.
Yeah, that's great. That's helpful. I have noted that, and we'll make sure we keep that in our public comment. Thank you. Any other comments at this time?
No, not at this time.
Okay. We'll hold on the line, see if anyone else wants to participate. We still have 67 people with us here today. Really appreciate the number of people who showed up today to hear this presentation and provide comment. It's very important.
Okay, Nicole, we have a comment.
Okay.
George Riviera, your mic is unmuted. Please go ahead with your comment.
Hi, George. Hi, George, is your mic unmuted?
Yes, good morning. This is Jorge Rivera from Unidos, US.
Thank you. Hi, Jorge.
Hi. So I just wanted to comment that for us to be aware, as you market this assistance, this program across the state, you do have to do work to combat scams and fraud that are going to increase as a result of this. You know, they'll come right alongside this program and look very similar to this. So there's got to be some thought put into education campaign statewide to target specifically the vulnerable communities, the our limited English proficient families, and maybe just some way to authenticate the communication or the commercials that are being used that this is legit, because you know, there will be a lot of folks soliciting our families in crisis and, you know, charging for services and so on, which is obviously the first indication of a scam. It's the first no-go. So just wanted to just put that into the conversation. It's very important that, you know, as folks get into more and more crisis, you know, they're apt to just fall into these fraudulent activities that will seem legit. Thank you.
Thank you. Thank you, Jorge. That's a really important point to make, and I appreciate you doing that. And I do know that fraud is an important part of the plan and what CalHFA is attentive to. But those are some good thoughts there that you provided. We appreciate it. Do we have any other comments right now?
Not at this time.
Okay.
Actually, we do have a comment from Judy Adler. Your mic is unmuted, Judy. Please go ahead with your comment.
Hi. Hi. I just wanted to point out that we don't have forever on this. My husband lost his job last June, and our house is in forbearance, and we have a conventional mortgage. So the lender is not as willing to work and to, for example, you know, they want a lump sum payment of the money that we're behind on, which is now up to $20-something thousand. And my husband's looking for work. I've got my substitute teaching credential in the work, but now I have to wait till September. I took my real estate courses to get my real estate exam. But as I turn in my stuff, you know, the state is over 2 months behind on reviewing applications so I can take the test. So it's like, not that some people aren't trying to get a job, but in the meantime, we're getting further behind, and this is not going anywhere. It's by the time, it seems to me, from what I'm seeing, that funds will actually be allocated, my forbearance will be done and over by far. Mine ends in July. They aren't going to do anything for me, and except for demand the money and then ruin our credit. So I don't understand why it's taking so long, first of all. And second of all, you know, what is going to be done for people like us? Because I'm not the only one who's in this situation where conventional mortgage, they don't want to work with me. And then what do I do when the money doesn't become available till September and it's too late for me?
Yeah. Well, Judy, thank you. Thank you for providing your story. I think that first of all, I want to encourage you to contact a housing counselor at the number provided on the screen. Okay.
I have.
Okay. And then we're working within the timelines that were provided to us by U.S. Treasury. So I know CalHFA is there are a lot of states behind California, but California is working hard to hit this June 30th deadline and launch this program as soon as it's approved and ready to go. So part of that is through partnership with the federal government, and so that's the timeline we're working with. But in the meantime, hopefully your loan servicer or housing counselor can provide you with some help in the near term.
Let me tell you, the housing counselors are no help. It's a really nice idea, but I worked at a credit bureau when I was in college many years ago, and we had housing counselors there. They're very limited in what they can do. They can give advice, but man, if I was so uninformed as to the advice that they can give me, I'd be in really a bad shape. I mean, it's beginner advice. They don't have any programs that, other than to explain to me how I can do, not a refinance, but it's when they restructure the loan and just destroy my credit, which is, I have 800 credit rating. I don't want it to go into the garbage. So, we're trying everything we can, but they were no help. Absolutely didn't really know anything. They just kind of go through a process, and you have to give them all your information so they can get credit and get their funding for helping you. And I thought, okay, so I'm just a pawn for money. And I called more than one.
Mm-hmm. Yeah. Well, Judy, this urgency that you have, I mean, like I said, we're stuck with these deadlines, but I think noting the urgency we've heard from you, but from several other homeowners in today's meeting, is something we might want to note in the plan to make it clear to U.S. Treasury that, the need is now. So, so that's helpful to know. Thank you. And I don't know if we have another commenter on the line right now.
Nicole, it doesn't look like we have any comments at this point in time, but I will let you know if that situation changes.
Okay, thank you. And we still have a good number of people with us here today. So if you haven't had the opportunity to provide comment, please do so. We'd like to hear from you. Or if you're not comfortable speaking in public on the meeting, on the GoToWebinar, then you please feel free to submit a written comment or take the survey that you can find at the CalHFA website at the web address noted on the slide. Want to hear from the folks in California.
Okay, Nicole, we have a comment.
Thank you.
Carol McKenna, your mic is unmuted. Please go ahead.
Okay, let me make sure I unmute this.
We can hear you. You're unmuted.
Oh, cool. I'm totally unmuted. Okay, I knew before I had to click some. Hi, everybody. Carol McKenna. It's me again. I was listening to Judy, and yeah, I appreciate everybody's input here. Do we have any idea, maybe we don't, realistically, what amount of money we may even be able to get? Do we have any idea? Because I know everybody's situation is different. Do we, any idea, or we just don't know yet?
Yeah, you mean, Carol, I assume your question means at the individual homeowner level, like how much money a homeowner can expect to receive through this program?
Yes, exactly. And
I will say the need is great in California for sure, and it's the federal government is providing these fantastic resources, but the need is great and the funds are limited. And so that's one of the elements that they're considering in building the program design, is how we can help the most homeowners as possible, but also make sure that it's enough money to help people address their need. See how best we can mesh the two. I know that's an important part of it.
Okay, I imagine it's going to be on maybe an individual basis. I don't know, or maybe it's going to be across the board, because some people 20,000, I'm 7,500, and kind of like Judy, I'm at a conventional loan, and they're like, well, best case scenario, you pay it now. Okay, how do I do that? It's extremely challenging. So thank you. I guess we'll just wait and see how it goes.
Yeah, please keep this website that we have listed is going to be very active here in the coming months, so please stay engaged and stay tuned.
And I was thinking what Judy said about the HUD. I remember it wasn't recently, but it was kind of before all this that I contacted them, and they try to be helpful, but they're limited with their resources, and so it was kind of not too much help. So that was my experience as well.
Okay, Carol, thank you so much. Thanks, Carol. Do we have other people in line to speak at this time?
Not at this time.
All right. We're almost down to our last 15 minutes here. It's 16 minutes. But we do have another 2 listening sessions this week. We're moving at a fairly quick pace to ensure that we have California's plan ready to go on June 30th to go to Treasury. Again, it's going to be an iterative process. We actually are still waiting for some guidance in some key areas from Treasury. So there's going to be more to learn along the way, and we'll continue to work to try to get the resources out as quickly as possible and make sure the program is fully formed as Jorge raised. Oh no, that wasn't Jorge. It's Kevin. Any other comments at this time?
No comments at this time.
Okay, we'll stand by.
Nicole, we have a comment. Gina DeGiro, your mic is unmuted. You can go ahead with your comment.
I was hesitating jumping in again, but since we have the time, I wanted to add a request to not require home-related expenses to be rolled into a mortgage to receive assistance. I'm thinking specifically of property taxes and homeowners association dues. What we often find is that homeowners find a way to maybe cover their mortgage, but not the other 2. And we want to make sure that they still are eligible to receive assistance, so that it doesn't require a mortgage delinquency in order to be eligible for funds, that you can independently just get either HOA dues covered or property taxes, because those can also cause foreclosure, which actually a lot of homeowners don't realize. And we want to just make sure that they're able to access assistance.
Great. That's helpful. Thank you, Gina. And I'm going to go back to, we had a slide here with some prompts, and I'm just going to revisit that right now while we have a little time left here, and we were asking for feedback. And so some of you who are still on the line with us have feedback related to, and I think we've heard some of this today already, but other barriers that you, other than the ones that have been shared, but other barriers you might have identified that could result in people not participating. I think we've heard some from a few folks. We've also interested to hear what kind of assistance is most necessary. So Gina just provided us with an example of some alternative assistance that folks might need to keep them from foreclosure. And then communication and outreach methods. We did hear a little input on that, but any of those three areas in particular, if you have thoughts you want to share with us, we are all ears and open to hear what you have to say. And I do want to say, if you think of something later, you know, you'll, as it always happens, right? You hang up from one of these things, you get off and you think of 3 other things you hope you wished you had said. Well, you can. So please feel free to participate in another one of our listening sessions or submit a written comment to CalHFA at the website below. So this is not your one and only chance.
Nicole, we have a comment.
Okay.
Sharon Watts, your mic is unmuted. Please go ahead with your comment.
Hi, Sharon.
Hi, can you all hear me okay?
Yep, we sure can.
Great. Hi, my name is Sharon Watts. I am a housing counselor here in San Francisco, and I work under the great Sherry Powers, who has spoken up many times today. But what I would like to add is that there be a component to this program which holds all servicers accountable to respond to the housing counseling agencies who are working to help clients. And I hear the frustration, we hear it, we understand it, we also experience what homeowners are going through. But when servicers are not required, or really if there's not an accountability or an enforcement tool to make sure they're responding to us, especially when we do have funds to administer to help homeowners, it creates a greater barrier. You know, so then the client and the counselor are left with nothing and going back and forth. So writing something into this plan that makes sure that servicers are aware that housing counselors will be assisting, that they are required to help, because homeowners get lost in the paper shuffle.
Okay, that's good. Thank you, Sharon. That's helpful. Thank you. We have a little under 10 minutes left here. So
we have another comment, Nicole.
Great.
All right. So Angel Carrencia, your mic is unmuted. Please go ahead with your comment.
Oh, thank you. It's me again. You know, I'm curious, or, you know, just maybe throw this into the pot with what they're making their decisions on. Somebody like myself, and, you know, of course, millions of others who are going to be facing foreclosure in September. If I do enter into a trial modification, hopefully they will still be looking at people like me who are still trying to hang on to our homes and not going into foreclosure by entering into an agreement, a trial modification, which I may or may not be able to pull off because I still am, you know, not employed due to COVID, and I'm still caretaking, you know, my 2 elderly parents. And so, I mean, I really don't know if I can pull off a trial modification even in 3 months. So if they would, the government would allow people like myself who have entered into these trial modifications who are still facing foreclosure, if they could take us into consideration versus allowing us, or, you know, letting us go into foreclosure and then after the fact, you know, I mean, my credit's already ruined. I could care less about my credit. I mean, I've had to walk away from all sorts of things in order to just provide, you know, food and, you know, necessary things for my elderly parents who are just, you know, really in worse shape than me. But if they could allow people like myself that, like I said, you know, I'm repeating, I know, but entering into these, well, for lack of a better word, crummy modifications that don't look very good to me in terms of even the amounts of money I'm going to have to be paying back in these trial modifications. It's, you know, I'm barely able to survive at this point. So, you know, if they could do that, that would be great.
Okay. That's helpful. Thank you for that input. Thank you, Rachel. Any other comments here as we reach our final minutes of the session?
Not at this time.
Okay. We'll stick it out here for our final 6 minutes. Not going anywhere.
I spoke too soon. We do have another comment. Judy Adler, your mic is unmuted. Please go ahead with your comment.
Hi, I just wanted to comment on the lady who just spoke. I didn't catch her name, but I do agree. I would hate to see someone, as someone who also needs money, but is not in that situation. I sympathize with her situation. I would not want to see somebody who is trying to do some kind of a program to keep her house not be included. Like, I wouldn't want the rules to be set up so that she's further down the path and she has to make choices and then she's excluded from the program. So I agree that there should be some way to determine need regardless. I think that the need should be determined by what is still owed, what was the amount of money that they were behind on. A household is behind on a mortgage, regardless of whether they're attempting to try to start repay it. The modifications, I agree with her when she's used the word crummy modification, because it will ruin your credit. I think that's really sad that, especially being that the lenders will sometimes do the modification in a way that they benefit largely from, with interest rates and other things, and then it still ruins your credit. That's another topic for another day, although I don't know whether you know, you're unable to do anything on that in the program. Say, hey, look, we need to do this, and we need to do it in ways that don't ruin our credits, because what happens if somebody, for example, this woman, she has to foreclose and then she needs to go out and find a rental home and she's got bad credit. So, you know, I would like to see something, if possible, happen so that the destruction of credit is put in forbearance as such too. So I just thought to add that. Out of fairness, I would not want to see somebody who's trying be left out.
Yeah. Okay. Yeah, Judy, thank you very much. This is good. It's great to get all this homeowner, specifically homeowner feedback. Do you have any other comments?
Not at this time.
Okay. Just a few minutes left here. Putting these feedback prompts up here if you want to know some specific areas we're looking for input on and you have thoughts related to any of these 3 questions, please chime in now. We have 3 minutes left, 3 minutes a comment, 1 more commenter or 2 maybe if you're fast. And again, if you think of something later that you'd like to add, or maybe you just want to write your comments down to make sure, please send them in to feedback@calhfa.ca.gov, or you can visit www.calhfa.ca.gov/haf.htm. Thank you so much. As we wrap up here, I just, again, want to reiterate on behalf of CalHFA, I tell you, HFA, on behalf of CalHFA, we want to thank you all for participating. And we saw a great turnout today, and we appreciate you sharing your stories and providing your insights from your experience. It's very helpful to us. Well, I know CalHFA is going to be working on putting together their plan here in the next 15 days to finalize it and submit it to Treasury. It's going to be an iterative process, so we want to continue to hear from you throughout. Information will be posted, a transcript of this meeting, and a recording of this live session will be on the CalHFA website in a few days. It takes a little while to get that done, but it will be up there for you to review and watch or read the transcripts. So we have just 2 minutes left. Last chance on a comment.
Nicole, we do have one more comment.
Right on the under the wire. Let's hear it.
Okay, Carol McKenna, your mic is unmuted. Go ahead, please.
Well, hi again. Just want to say thank you for doing this. That's all.
Oh, wow. Thank you, Carol. That's nice. Thank you. Well, I am going to close us out here in our last minute. And again, appreciate the input. We want to stay in touch, so please provide any feedback you have in writing. We're going to be taking all the comment we receive here in these meetings, that we received through the survey, that we received in written form, and we're going to be compiling it and using it to help finalize and formalize the plan that is being developed to submit to the U.S. Treasury. So this is important feedback that will make a difference and will be incorporated. The plan will be posted, the submission that we send to Treasury will be posted on the CalHFA website after it goes to Treasury. So if you want to see what moves forward, but against the phase 1 plan, it's going to be iterative. So please keep that in mind. And with that, I'm going to close us out and say thank you very much, and thanks for your participation. Have a great rest of your day.